Welcome back to Tape Reading Concepts. My name is Nikolai, and in today's advanced level lesson I will take you over an opportunity I pursued on Tuesday morning. This is the Nasdaq futures, 389 ticks, and the context for this market map begins at the start of the week here. The Sunday night open, price leaves us three alternating extremes: the overnight lows, the overnight highs, and the lows that price finds here just after the regular session open. These three alternating pivots create a bullish frequency of relatively impractical slope. This is steeper than 45 degrees, therefore something that price is unlikely to maintain for an extended period of time. Therefore, you can see that other than the original frequency here defined by the three lines, I also have a sliding parallel equidistant here below the lower parallel. As you will see, this will later become significant. So as we zoom here on Monday, notice that after the opening bell here, 9:30, price finds the lows around 13,960, and then a relatively steep or deliberate climb in the morning session until about 11 o'clock, where we challenged the overnight highs. For the remainder of the session, notice that the volatility is much more subdued, and overall going into the close of the session, which is fairly bullish, we close just above the overnight highs, almost on the highs of the day. With the subdued volatility, notice the difference in slope here between the early morning action and then right here, most of the buying happening above 14,100. With the beginning of the Tuesday session, notice relative to our reference point here, the lower parallel, that price fell a little bit short of the middle and then has already at this point translated below this upsloping line. And with the post-market here into the Tuesday session, we test the backside of the line, in the process consistently leaving slightly higher highs every time. This is the place to point out that the Nasdaq mini futures trade at $20 per point, and my horizontal lines are placed at every 10 points. There are 4 ticks to a point, but each one of these boxes is $200 per contract of risk or profit. So if we follow here the price action overnight into the European session on Tuesday, notice that this steep dip here that happens during prime time Europe takes out the majority of the positions that were established in the late morning and afternoon sessions above roughly 14,100. This dip here is about $500 plus. Therefore, it's reasonable to assume that most of the bullish positions established here later in the session are taken out. Yet, notice that there is no follow-through. This is a very bullish event. It's reasonable to assume that since we see new lows but no follow-through, then the dip in price, once the book is cleared out of the already established late long positions, the dip in price is perceived as a discount, and you can see that following this discount, price very steeply rallies into new highs. An extremely bullish precedent here moving into the pre-market in the US session. Notice 7 o'clock, 8 o'clock. This is usually when I come to the table with the US pre-market. At this point, we've already seen a dip, clean book, no follow-through, and new highs. So I'm looking for a long idea. So at the contextual level, now my job is to establish where and how to place my position. I'm observing here the sequence of consistently higher highs, and that sequence of equidistant pivots does create what we call a sloped ceiling. Now, this frequency is created here by the first couple lines, and it's by the first couple points, the first highs, and then it's projected forward as a reference point. Now, following the first two, this is the reaction to the downside, where 14,100 holds, and then we go to slightly higher highs. So if I'm interested in discovering whether this projection will be symmetrically respected, then I need to transfer the same frequency at the first reaction, therefore establishing the frequency and the reaction line. And then if we move a little bit later here into the pre-market, going into the regular session, notice that as price dips towards this hypothetical floor, that we do consolidate here, and it seems that we will find the buyers and support here potentially. Looking here at the other reference point, which is this sliding parallel, notice that after we tapped the backside here of the lower parallel, we came and translated to this lower parallel, and it held in a crystalline fashion going all the way back here just short of the top. So it seems that in essence price has transitioned from being here on Monday within the lower quadrant, and it has transitioned here overnight on Tuesday into moving into the Tuesday quadrant. So I already have a couple hypothetical areas in which I'm interested in placing the idea, and my projection here is to arrive again at this line here into what would be a higher high. So following here, I already know that the sloped ceiling is not solid. Price has been above it, and next time when I arrive here, notice that instead of finding resistance, price is actually oscillating above and below the line. Since this is the second projection, my expectation is that we're going to see development promptly. Therefore I was looking to get positioned on a slight discount here on the downswing. Did manage to pick up the position. Now unfortunately this is a relatively aggressive placement on the backside of the initial highs here established in the pulse market. The stop here will have to be huge to be hidden behind the hypothetical support. Therefore just a local stop. In other words, I'm calling the timing. If price doesn't develop here promptly, then I'm probably wrong and I cannot play defense. I do not have staying power with this opportunity, and therefore pitching here the position with about 22 points, it seems, of risk. So the initial attempt for a steep development fails. Nevertheless, I'm still fairly bullish. I've seen nothing but bullish events here on the tape, so it's a matter of nailing the placement and the management. As I come back down again to pretty much the confluence of these lines here, you can see the upsloping reflection of the ceiling. Then we have the larger context here from Monday, translating also as support, and also the last higher low here left in the pre-market. So I'm looking to potentially participate here with a slightly larger stop that would leave my risk well behind the last low. If price is indeed bullishly inclined, then it should be some sequence of higher lows and higher highs. And you can see here as we dip down that the buyers are finding here. I'll zoom a little bit more on the tape. We do get this sharp transfer of energy, and then holding a shoulder on the right side, and then on the push up we go and break the high. Therefore I decided that it's worth pursuing the opportunity somewhere between this line and this line. I did trade at the higher of the reference points with a stop all the way below the last horizontal here. You can see a little bit of safety, and I'm also above this sloped floor. I did take a little bit of heat. You can see that about half my stop was placed below the lower sloped reference point, and of course a few points here below this low here at the extreme, right around the open. Here my risk was just about, how much is this here? Yeah, so 33 points is the risk, each one of them $20. My projection here is higher prices along this line, so it seems that it'll be above 14,250 when or if price gets there. What follows through here is we're getting in a pinch between the frequencies is cautiously bullish behavior, orderly buying. You can see that the pullbacks are roughly the same size, higher lows and higher highs, and there was a lot of bullish positions established here in the prime time of the US session, between 10 and 10:30. We did lean on the high. We did make marginally higher highs here, but there was no immediate follow through, and as a result of that there was a bit of a dip here, putting the weaker hands under pressure. Not a lot of long covering, and then ultimately finally translating below this sliding parallel again. Notice, however, that price is oscillating evenly, mostly around the line, and still getting attracted and pulled higher by this relatively steep upsloping line. Just around 11 o'clock here, which is when the volatility died down in the previous session, we actually get the follow through today, new highs, and still hugging along the steeper frequency here. We did translate below it. We moved slightly further away here, but still hugging the line, and ultimately I decided to close the opportunity just above the original idea here, 14,250, right on the back side of this line. This also happens to be, notice the distance here between the action and reaction lines. If we translate this distance one more time, I'll copy this line, you will see that this is almost exactly the same distance higher. So as we break the next quadrant, I was aware that it's likely price will follow through a little bit higher since it's getting fairly steep here, but this is already thin air, and the projection is uncertain. I already had 1, 2, 3.5 candles almost. You can see here 3.48 times the initial risk, and ultimately here by the end of the session price did end up going a little higher, with the tops here, recording this on Wednesday morning, with the tops being found another, it seems, 60-65 points higher than my exit. But I was perfectly happy with the trade. Entered here around 10 o'clock. The exit was right after 3 o'clock, so overall 5 hours for 3.5 candles within the opportunity. Of course, I lost what is here 2/3 of the 33-point stop that I used. So the first attempt unsuccessful. Still a good attempt to get on board for what was potentially going to be a quick move up to the expected target. Hopefully these advanced lessons are insightful for you as to how we use the tools that we employ here to define market context, find confluence, place our opportunities, and manage logically. The channel is new. Like, share, subscribe if you like the videos, and I will catch you in the next one.